Welcome to Nigeria's Hope Horizon event. My name is Camilla Oros Saruhis. I'm the Managing Director of City Productions, agent for the Economist Group in West Africa. We'll just start by saying something from the intro into the feature in The Economist. The pandemic took our globalized world by surprise, then stopped some of the most active hubs dead in their tracks. As New York, Paris, London, and other economy-defining cities froze, in Africa, the dynamic development has not slowed down. A fresh wind of youthful countries are too strong to hold down. They have seen mistakes made in other parts of the world and are avoiding them, taking the best of technology and entrepreneurship to move ahead swiftly. More on Nigeria has successfully dealt with COVID and how businesses and different sectors of the Nigerian economy are pushing through in uncharted waters will be analyzed in today's event, which marks the launch of the feature entitled Nigeria's Hope Horizon, Getting Back on the Growth Trajectory, published in this week's edition of The Economist, with an expanded version in our in-house magazine, Focus. Now, everyone knows about the biggest publication in the world, which The Economist is, and for which we are very proud to be their sales agents. But you might not know yet that Focus magazine is a publication that has a print coverage across Africa in 2 languages at this point, in English and French. And we are happy actually to announce you that we are going beyond the continent. But more on this as we go along. Faith, our OB Meet partners, will be sharing with us shortly the links to both digital feature in The Economist and Focus magazine, so you can have a read during the event or after the event. And print copies will reach to the offices of our clients and our partners for further distribution in the markets. Before officially introducing our moderator for today's event, together with our special guest speakers, we know that the program of the virtual event focuses on a 2-panel conversation with the public and private sector in Nigeria. Panel 1, Building Back Up for Growth. That is a panel that is supported by our diamond sponsor, MasterCard. And panel 2, Growth Sector and Strategies, is a panel that is supported by the other diamond sponsor, Farm 40, with its Capital Forest partner. We will have as well as keynote speakers right after panel 1, the Circular Economy Innovation Partnerships Chairwoman, Dr. Ndidi Noli Adozien, and our premier sponsor for today, besides our diamond sponsors, will be Braid Group, our gold sponsor, and our silver sponsor, Lagos Internal Revenue Service. I'd like just to take the time and send special thanks to our partners, our technology partners, Kaisa Technology, where we have our offices right now, on Sakatinubi number 35, that they are the representatives of Konica Minolta in Nigeria and Ghana, and OB Meet. OB Meet is a great platform, is next Zoom, and more than that, it has a Nigerian, a local content partnership, and we are very, very happy to support them as they are support us today. Our research partners, as we said, is the Circular Economy Innovation Partnership. We're going to discuss later about this. And without further ado, I would like to introduce you to Melanie Norona. Melanie is a senior editor for the Economist Intelligence Unit Thought Leadership Division, and even more right now, but she's going to share those news if she wishes to. Is the editorial lead for Europe, Middle East, and Africa. Over the past 4 years, she has led global and regional research projects on financial services and fintech, ocean sustainability, trade, infrastructure, technology, and innovation. Melanie has an MCS in international strategy and economics from the University of St. Andrews. Welcome, Melanie. This is quite the 3rd time in a year, that we see you. You're like part of the team. We're so happy to see you today again. It's been almost like 1 year already we closed since our first webinar, just around when COVID hit, and we are so happy to be with you again. And hopefully in our next event, we will be face to face. And this is our wish. So we have a very interesting webinar today. It's not about fintech, it's really about Nigeria's Hope Horizon. So what is, in your opinion, Nigeria's Hope Horizon to start with?
Thank you so much, Camelia, for that lovely introduction. And you're right, I do feel part of the CT Productions family now, having done quite a few of these with you, and I hope to continue to be engaged with your team. It's been a wonderful experience. So just to introduce myself again, thank you, Camelia, for the introduction. But once again, my name is Melanie Norona. I'm a senior editor with the Economist Intelligence Unit's Public Policy and Thought Leadership Division. We're doing some exciting research across this region and across the world. And I think for today's discussion, I'm really thrilled to be delving a little deeper into the economy of Nigeria, the largest economy and the most populous nation on the African continent. So just to set the scene a little bit, I think as with the rest of the world, the Nigerian economy took a hit in 2020, contracting by about 1.8%, according to estimates by the Economist Intelligence Unit. And the economy is projected to grow this year by about 1.2%. And we're expecting to see stronger growth in the coming years, over the next 3 years, of about 3% each year. And at the heart of this recovery will be the COVID-19 vaccine rollout. So the government aims to have about 70% of the population vaccinated by the end of 2022. But I think we have to be mindful of the challenges with vaccine supply and storage that could mean that mass inoculation could take a little bit longer than expected. So something to be mindful of. Now, some of Nigeria's key sectors were affected last year. One, I think, would be the oil and gas sector. So the oil price slump adversely affected the oil and gas sector. And that's so essential because hydrocarbons make up about 50% of government revenues and about 80% of export receipts. And that contributed sort of to the increase in public debt last year. So it's very important then to focus on that policy of diversifying away from oil and strengthening key sectors such as agriculture, manufacturing, fintech, which will really play a vital role in Nigeria's growth strategy. But now to really get into the details of it, we have representatives from all of these sectors on two very exciting panel discussions for you today. As Camelia mentioned, the first will be on building back up for growth, and the second on growth sectors and strategies. So to really kick off the first one on building back up for growth, in this panel, we will explore some of the broader macroeconomic trends that are shaping Nigeria's growth strategy. And so joining me in this discussion will be our esteemed panelists. And today we have Ebehije Momo, Country Manager and Area Business Head, West Africa at MasterCard. We have Toki Mabagonje, President at the Lagos Chamber of Commerce. We have Dr. Armstrong Takang, Special Advisor ICT to the Honorable Minister of Finance in Nigeria. And we have Dr. Akin Abayomi, Commissioner of Health at Lagos State. So a warm welcome to our panelists here today. And I would like to structure this discussion into three main parts. The first focusing on the state of the Nigerian economy. The second looking at driving inclusion. And the third on economic opportunities. And I do encourage our audience to please send in your questions for our panelists. I will keep a little bit of time at the end for some questions from the audience. There's a group chat function where you can send in your questions, and we'll have someone from the CT Productions team read it out closer to the end. So to start off with the state of the Nigerian economy, I want to start with Dr. Akin. Dr. Akin, can you tell us where we stand in Nigeria with the COVID-19 pandemic? What are some of the key challenges the country is still grappling with? And is there a visible path to recovery?
So thank you very much, and good morning to all your listeners. So I think, with COVID, we have learned some very serious lessons. We had an idea of what a shock to a system was going to look like during the Ebola outbreak. And so we...
Apologies, Dr. Abayomi. If you can put your camera on, it'd be lovely to see you. Apologies for interrupting, but it would be lovely to see you as well as you speak. But if you are facing any technical difficulties, no problem. We can carry on with your response.
So there you go.
Fantastic. Thank you very much. Sorry, you were telling us.
So I was saying that, you know, COVID has shown us some significant issues that we need to deal with, at least in this part of the world. And our health systems were weak. We were somewhat prepared after the Ebola experience. But with COVID and the shutting down of the economy, the lockdown strategies, and the limitations in movement, it caused, you know, primarily as government, where our job is to keep the economy rolling, keep the economy buoyant. So a public health response, apart from the primary responsibilities of preventing sickness and death, is to ensure that, you know, the consequences of a biological shock are not going to slow down the economy and plunge us into some kind of security or lack of security environment. So it's a double-edged sword for us, you know, tackling the public health response and ensuring that we allow Lagosians and Nigerians to continue with their daily livelihood is very important as one of the main focuses of the response. And what we've done in Lagos, we've tried our best, because we know our health systems are fundamentally weak. We've been very aggressive from the outset to make sure that we minimize the ability of this virus to spread in community. Whenever we got a wave 1 or wave 2, we bring it under control. But we've also turned the epidemic into an economic opportunity. You know, Nigeria's not done well generally throughout this period as the rest of the world, but we've looked at the famous adage that don't let a crisis go to waste. And so, you know, we've tried to turn the economy in a way that benefits from the circumstances that COVID has plunged us into. We're fully aware of the economic situation in Nigeria and in Lagos. You know, our total revenue is perhaps 50% of anticipated. For Nigeria, we expected to make about 8 trillion in 2020. We only made half of that. What we made, we had to give back in terms of debt servicing. So what's left for the government to spend is very little. And then we talk about increasing the spending towards health. So these are the fundamental issues. And, you know, it's very important for us as government to realize that, the economy to a significant degree is driven by the private sector. And what we did was to incorporate the private sector into the COVID-19 response from the word go. And that did 2 things. It took a lot of pressure off the government, allowed the private sector to participate, obviously, under the regulation of the government. But it also generated an economy in an environment that was struggling with, lockdown and slowing down of, Lagos is a big mega city. One of our key economic activities is entertainment and services. But we turned it around and, we are able to kickstart a new form of economy, which is a digital economy and a biosecurity economy, and all the facets that go around the public health response and keeping people and their businesses as active and as buoyant as possible. So I think it's the first thing to talk about in terms of the impact on the Nigerian economy. Thank you.
That's great. Thank you so much, Dr. Akin. I think you set the scene really well for what is maybe the most pressing issue of the day for Nigeria at the moment. Toki, I want to turn to you next, just again to continue the conversation about the state of the Nigerian economy, but maybe focusing a little bit on that relationship with foreign investors. That's one of our key topics for today. So just to understand, what's the status quo with foreign investors? Is it time to, strike a new type of deal with institutions such as the IMF and with countries such as China and Western nations? It would be great to get your thoughts on that.
Thank you. Thank you very much. If you'll permit me, I'll just backtrack a little bit, because taking off from where me left off, I'd like to speak a little bit towards public debt and then go into the focus you're asking me to talk about. Because at the Lagos Chamber of Commerce, going from the scenario that Professor Abayomi has just painted for us, one of the big issues is really around public debt and how that is being handled. Total outstanding debt, as of December 2020 was about 32.9 trillion. And this debt profile keeps growing. We have in place a medium-term strategy for this by the federal government, where the federal government is saying, let's revise our GDP, debt to GDP ratio up to 40%. Let's structure it so that domestic to external debt is 70 to 30. Let's also have minimum tenors of 10 years or more. And then let these be long-term, really, and as much as possible. And when we look at that, and we look at the fact that Nigeria actually has this penchant of, obviously, government continues to borrow. At the Chamber of Commerce, we feel that borrowing to pay off existing debt is not a sustainable strategy. What we're really, really pushing for now is what we call the optimization of national assets. So we feel that right now, the majority of the country's debt securities are not linked to assets. We feel that there's a need to create a national asset register, that we need to know the composition of what we have and what the value is, that we need to create a coordinated mechanism for valuing and managing Nigeria's assets, and that, we're recommending that the country's corporate assets should be securitized, right? And the physical ones should be commercialized, because we feel that securitizing corporate assets could also be a way of helping to show this balance that we are trying to achieve while borrowing in order to find a way forward with the economy. So listing the LNG and other state enterprises publicly would be a way of increasing our access to monies while managing our debt profile. In terms of foreign investment, the picture right now is not very promising. There are a number of things that are standing in the way of foreign investment. One, of course, is what is obvious to all of us now, which is the heightened insecurity in the country. That is a big concern. The second big concern has to do with policy and assurances behind that. A lot of our policies more recently have not been what in the chamber we call investment friendly. We've got to have policies that engender an investment friendly environment. Some of the indices, when you do have that kind of friendly investment environment, is you'll also find domestic investors investing, in greater proportion as well. It's not just about the foreign investors. We need infrastructure development. Our infrastructure is at, there are lots of gaps there. So infrastructure development is key. Another thing we're advocating at the chamber is that whatever investments we attract, we need to direct them at infrastructure projects, rail, road, and that kind of thing. We also need greater investment in human capital development, because the one thing that roots foreign investment is actually having the human capital within country to be able to implement those projects, those businesses, those industries that are trying to gain root in the country. And also currently investment in the social sector is also low. So we also feel there should be encouragement around things that would impact positively on new economic opportunities, that would help to reduce inequality in our social space. Thank you, Melanie.
Thank you. Yeah, thank you so much, Toki. I think you really, again, helped build on what Dr. Akin was saying, and really highlighted, I think, the issue of public debt and some of the challenges around securing foreign investment as well. So thank you for doing that. I want to turn to Dr. Takang. Dr. Takang, there we go. We can see you now. That's fantastic. Welcome. And I don't know if you heard a little bit of what Toki was talking about, if there's something that you want to respond to on the public debt front. But I think my question to you is about some of Nigeria's longer running challenges. And I want to talk a little bit about inequality as well. By 2022, there are expected to be over 100 million extremely poor people. So it's just, I think if you can comment a little bit on the inequality gap, but also I'll let you respond to any other comments that were made so far as well.
All right, thank you very much for that. I just want to thank you very much for the opportunity of being here and to just contribute to the discussion. I think a lot of the things about our economy have already been stated in terms of some of the challenges that we've been facing, particularly that have been worsened by the COVID-19, but that we see some of those opportunities that are coming through. But let me speak a little bit about the issue about our assets. The fact is that there's been a lot of focus on debt, but very little about assets. People can tell you almost authoritatively about what we owe, but not much about what we own. I think Toki has touched on a very key point there, which is one of the things that the government is doing at the moment, to really say, what do we really own and how do we extract as much value from those assets as we can? I think the other thing that has to be remembered is that there's been a lot of borrowing, but those borrowings have also been focused on driving growth in different sectors, building infrastructure, going into social sectors like education, healthcare, and those the challenge really has been in the past, we've not focused on linking those borrowings to equivalent assets. And you'll be seeing very soon a lot of work in the area of ensuring that for each borrowing or for each spending that the government is making, we're creating the asset equivalent of that by ensuring that we're not just giving out grants, but that the borrowings, the spending that is being made would crystallize into different asset classes either, and each of those assets would be expected to be generating cash flow at some point. There's a whole lot of work going on in that sector, and I think it's a key thing that you really need to remember, because I think a lot of the discussion about debt seems to be taken out of context and discussed in isolation of the assets that are being created through those debts. Because if you look at a lot of the borrowings in the last couple of years, a lot of them have gone into infrastructure. Today we have an extensive network. I strongly believe that would have a major impact on our economy. You're having extensive rail networks from the south right up to the north. We think that would have significant impact in terms of the ease of moving goods from one part of the country to the other. We also think that it would also ease a lot of movements and reduce the pressure on our road infrastructure going forward. And we think that a lot of those things would have significant impact on our economic activities. But to respond to the specific questions that you mentioned, one, in terms of the sorts of challenges that have been consistent, I think one of them clearly that everybody has been talking about is the issue about security, right? And we all know the impact that insecurity has on our economy. But I think one thing to remember is that there's a lot of effort in really stemming a lot of those insecurity challenges. So significant investment in terms of the infrastructure to help us combat a lot of that insecurity, not only through force, but also through intelligence, in terms of gathering sufficient intelligence to enable the security forces fight insecurity in different parts of the country. And I think we're seeing significant results in that area. The second challenge that I'd like to speak to is the issue around generating revenues by government. As you know, a lot of the budget that we prepare is based on us being able to generate sufficient revenues to fund those budgets and reduce our deficit. There's a lot of effort at the moment by the government to increase the level of revenues across the different sectors in the financial services sector, in the infrastructure, healthcare, education, but even more importantly, in terms of taxes as well, in terms of ensuring that we're getting as much revenue for the population as we can. One of the challenges that we've had in the past is really not being able to profile our taxpayers. There's a lot of intelligence and information today about taxpayers, both individual as well as corporate taxpayers, through the joint tax, the tax identification numbers. The number has increased significantly in terms of being able to know those who ought to be paying taxes and how much they should be paying. There's a lot of work going on there. There's also the issue around easing the process for collecting taxes as well that we're seeing. The third area clearly is the one of unemployment amongst, especially particularly within our young, our youth population. But there's a lot of work going on in that area as well. The social intervention program is aimed at injecting a lot of money in that space to give up economic opportunities to our young people, to give them that space. There's also a lot of activities in the agricultural space. There is the issue around the livestock program, national livestock program that is about to start. And the idea is to really move from the traditional means of cattle rearing to ranches and also increase the productivity in that space. There is the issue around mechanization of agriculture, expanding the footprint of equipment that are available to the farmers across the country to ensure that you increase the level of mechanization and increase the level of productivity so that you have higher yields from the same acreage of land that we have across the country. So yes, there may be some challenges, but the key thing here is that in each of those areas where we have challenges, there are significant efforts that are going on. Some of them may take time for the results to manifest, but we're strongly very confident that
Thank you, Dr. Armstrong, I think, for talking us through some of those initiatives that are going on. You did at the end talk a little bit about unemployment and the need to address that. And I think that's a great segue for us to move into that second part of our discussion on driving inclusion as well. And Toki, I want to turn to you for a question on this. Just building on that need to address inequality, what would you say are the priorities in creating an inclusive economy? One where all Nigerians have access to education, to healthcare, to jobs and finance.
Thank you very much, Melanie. I think one of the biggest things that COVID has taught all of us the world over is the importance of small and medium enterprises to the growth of any economy in any country. So I think that at the Chamber, we feel that greater enabling and business environment and greater investments in SMEs would drive prosperity in that area, and it would deepen economic inclusion. And this is especially so for Nigeria, because our SME sector accounts for over 9% of employment. And that just drives the conversation around job provision for our burgeoning youth in this country. We find that in investing, there needs to be greater investment in infrastructure development, as I mentioned, but a greater focus on on honesty in when investing in infrastructural development, and focusing on much more on what impacts the masses, what will enable movement of people, of goods, of services, democratized markets, improved access to funding for these small medium enterprises. There are quite a few initiatives that the government in very recent times, especially under COVID, but there's still the question around ease with which our small and medium businesses are able to access the funds that they require to drive their businesses. I think a lot more needs to be done around that, around simplification of processes, around the inclusion. I think quite a bit of the work that's been done by fintech companies in recent times has sort of broadened that inclusion, but I think a lot more really needs to be done in that area. And then, we talked about I mentioned the social sector area and having more investments in that area. I think it's tough. I do think that a tough job with the added issues of the health pandemic, the insecurity that's going on, and some of the reaction that has to be going on around the clampdown movement of people and their freedoms and so on. It makes it a bit difficult, but I think that there really needs to be greater effort around inclusion. We do have a financial inclusion strategy, which actually was passed quite a few years ago. The government, the banks have made some headway with their established agents, trying to reach people in the rural areas, trying to give people better access to funding, but we'll greater use of technology in doing this. There needs to be effort around the because about COVID, it is to the prosperity of the people. And so really at the micro level, funding that actually takes into consideration access to education, access to technology is really going to be very important in driving this effort of inclusion. Thanks, Melanie.
Thank you, Toki. Again, yeah, you're right. I think funding to improve access to technology, to finance, education, I think all of those will be absolutely vital. And again, I think an effort made harder because of the COVID-19 pandemic. Dr. Akin, again, if you're able to turn on your camera, it'd be lovely to see you. I do have a question for you. I just want to confirm that you can hear me, Dr. Akin?
Yes, I can hear you.
Fantastic. All right. So Toki spoke a little bit about financial inclusion, but inclusion also refers to access to healthcare, which has been all the more important this past year. So what are some of the critical action points, for the government to improve access to healthcare in Nigeria?
So, I mean, this is a really fundamental and important question. With the huge national debt that we've all talked about, with the country having to keep borrowing to run the government, and then on the other hand, you have the GDP that's driven by the private sector that's almost 30 times the size of national revenue. One has to look towards this private sector as a way of harnessing some of the health social safety nets that we so desperately need for a particular sector of society. So we found this, we used this model in COVID because it was just impossible for the government to provide the entire COVID-19 response in Lagos anyway, because of lack of resources and the sheer magnitude of the response. And so we looked towards, obviously, we've all talked about the tax base is very narrow. There's insecurity all over the place. There's loss of livelihood. We tried to protect the health sector by making sure that there was no collateral damage and that the facilities that were managing COVID were dedicated, and the rest were able to continue to provide services to the rest of the Lagosians. And to some extent, this is what happened across the country. But, we can't really run a social service in a country that is not a high tax paying or doesn't have a high tax base, and therefore we need to be very out of the box thinking in how we're going to provide this inclusion in health services. Obviously, we talk about, the insurance systems, we talk about, infrastructure, and we talk about renewing the trust that the people have in the public sector and in the government regulated private sector, because you can't sell a service if people don't actually want it. So you need to really commit finances to capital to improve your infrastructure, to build a trust amongst your people that they would want to go out there and buy an insurance package, because your experience determines what you are purchasing. And so if your infrastructure is all broken down and crummy, your doctors are emigrating out of the country, the nurses are dissatisfied with the services. So government has to spend quite a lot of money on infrastructure and human capital. But where is that money? That money isn't readily available. And so the only place to look for it is essentially in the private sector and generate a relationship between private sector and government. There's been a lack of trust between those two sectors historically. But how do we engender that trust between the private sector and the government? It did it quite well with COVID. One of the things that the private sector says is if you do work for government, you'll never get paid. And the bureaucratic mechanisms are so difficult to maneuver. And so, we made a deliberate effort to assure the private sector that in their participation in COVID and in health in general, that the government was going to respect their time, respect their services, and make sure that the environment, creating the enabling environment to do business in collaboration with government, and then in a way, operating the principle of robbing Peter to pay Paul. But the other thing I want to talk about is really the budget, although we've talked about limitations to the budget. But, the budget is one thing. There's a budget drawdown is another thing. And then there's budget impact. And I think governments now, with these scarce resources, we don't want to keep borrowing and increasing our total debt, cumulative debt. I think it's important that we start to pay attention to what programs we're running and what impact they're having, not just on the general health of the citizens of Lagos, but also building that critical human capital that we've just talked about, which is a combination of good health and good education in the formative years. And when we talk about formative years, that starts with the pregnant woman. If a woman is pregnant and she's not eating properly, then you get neurophysiological underdevelopment. And if you have a whole, thousands and millions of the next generation are all suffering from both physical and mental stunting, then you can't build a human capital, and neither can you compete in the international forum, and the fast-moving pace of development. We're just talking about this platform that's developed in Nigeria. This requires young, bright, intelligent people, and for us to get that, we need to make sure that we're paying attention to the neurophysiological development of our babies, our young children, our young adults, and ensuring that we expose them to adequate education, build that capital base. So I think that's what I want to say on that point for now. Thank you.
Yeah, thank you, Dr. Akin. Again, I think emphasizing the need for access to healthcare, then to have a healthy workforce and a workforce that will continue to contribute to economic growth in Nigeria. So thank you for sharing those thoughts. Dr. Armstrong, I want to come to you now again to continue that conversation on financial inclusion. Toki just mentioned you know, the financial inclusion strategy. It'd be great to hear if you can elaborate a little bit more on that and get your thoughts on the, you know, future of financial services in Nigeria, and perhaps just the specific opportunities, you know, within the mortgage market or the insurance sector. It'd be great to get your thoughts on that.
Yeah, thank you very much, Melanie. So let me start by stating very clearly that I think that the one of the advantages that Nigeria has had in the inclusion area, particularly when it comes to the use of technology, is the fact that we have not had as many legacy issues as you do have in the West. And so we've been able to leverage on the capabilities of technology to expand the footprint of financial services to different beneficiaries. And so, you know, over the last 10 years, we've seen situations where populations that were typically unbanked are now having access to financial services through financial technologies, particularly even by fintech companies that are not your traditional deposit money banks. And so, from in terms of the opportunities that we see, these are the areas where we see the opportunities. Initially, when technology was being deployed for financial services, it was around cash, not use cash, but you know, using electronic transactions. But what we are seeing is the fact that to really leverage on technologies in the financial ecosystem, you need to go beyond just being cashless. You need to add more value and be sector specific. What do I mean by that? If you take the healthcare sector, for instance, it's not just about saying that in the hospitals or the healthcare facilities, you don't need to pay cash, you can bring your card and then you pay or you do a transfer, but really being able to automate the entire value chain from registration right up to consultation. You go to diagnostic services, payment for those services, and then you follow through with the care to that patient and having a profile of that patient even after they've left the facility. Being able to digitalize a lot of that process. You know, the companies that are going to be successful would need to look beyond to adding value and automating the entire value chain in each of those sectors. If you take education, it's another area. First of all, if I go to education in healthcare, we're already seeing a lot of that. If you go to a lot of the federal medical centers today, there is the process of automating the process from the beginning right up to when you're discharged, and the payment points, and each of those is being automated. That allows us to not only facilitate the payment process, but also to get a deeper understanding and better insights into the healthcare process, the challenges that the patients are facing, what types of opportunities for intervention there are, and then also investments in that space. And we're seeing that that data is leading to a lot of healthcare equipment providers knowing exactly how they can recoup their investments. And like Dr. Barami said, we need to be able to find opportunities to bring in private sector. And we think that a lot of this digitalization in the healthcare space is providing the data that is converting a lot of private equity partners, and even from the banks as well through loans. So we're seeing that. If you take education, for instance, it's the same thing. There's been some initiatives where you digitalize the payment process, in just digitalize education processes in education. And then some of them are obviously would provide opportunities for financial services and fintechs, banks to be able to reach out to a lot more people. But we also see from a policy perspective, really helping people become more comfortable with electronic platforms. Many people have been a bit reticent, worrying about security issues, online security issues, and so we really are working towards ensuring that people feel secure that when they carry out their transactions on online platforms, their money is safe. Or those services to make sure that their platforms are safe through some of the data protection policies that are coming from government, and we're seeing significant opportunities in that space. But one other area that I just want to speak to is the domestication of data. About 7 years ago, the government decided that if you're doing any business in the electronic platforms that involves the data from of our citizens, then that data has to reside in country. And we're seeing results of that already, which is the local content guideline process, where a lot of the firms that had invested significant amount of money in data centers and infrastructure in anticipation of the digital economy are seeing a high level of patronage, because even the multinationals recognize that even when they do business in Nigeria, despite the fact that they have opportunities to host their data offshore cheaper, but by virtue of that policy, they're beginning to a lot of uptake of opportunities for the local companies to do that. We're also seeing, in the case of from a financial inclusion standpoint, we're seeing the increased level of fintechs within the country, where a lot of startups, particularly in the angel investing space, that we're also monitoring very closely. There are a lot of startups in that space who are looking at different opportunities in the fintech space that the banks have neglected for a very long time. And we're also seeing a huge inflow of growth capital and angel capital as well, getting to fund a lot of those those opportunities. Specifically on the mortgage space, the challenge that we've had is the issue around the cost of we really don't have traditional mortgages by virtue of the cost of it. If you look at the rate at which people borrow, the tenure of it is also very short. But we think that as we begin to mobilize a lot more private capital at a cheaper rate, long-term capital, and bring it into that space, and also increase the number of houses that are being built. For instance, the government has a housing program at the moment, particularly for low-cost housing. We think that if we reduce the cost of the houses and also the cost of the margins that the developers have to make, then it makes it easier to increase the number of people that can afford these homes, and hopefully that will make it attractive for either developers or other mortgage companies to come in and help with that process. So over the next couple of years, we see where, as government builds a lot of the low-cost housing houses, there'll be a lot more private capital that will come in to take over some finance mortgage market. In terms of insurance, the insurance, again, as you know, the level of adoption or use of insurance in Nigeria is extremely low, lower than it should be. There's a whole lot of work that is going on in that space. One of them is clearly increasing the capital base of the insurance companies. As you can see this, as you know, there's a recapitalization of a lot of the insurance companies to give them the capital base to be able to take on bigger risk and take advantage of the other areas. Because over time, what has happened is that their capital base has been so negligible that a lot of insurance opportunities have really gone to offshore underwriter companies. But with the current process to increase their capital base, we believe that by increasing that capital base, you can open up a vista of new opportunities for them. And we think that by the time that process is completed, you would have a lot more opportunities. But this trust instead there is if the insurance crystallizes, they get paid, right? And so NICOM is getting actively involved in ensuring that every time a policy is issued, NICOM is involved in that, because there's a platform in place right now that allows the underwriters to first of all get authorization from NICOM before they issue the license, because NICOM will give them the policy number. That way we have visibility, the ministry has visibility over that, NICOM has visibility over the policies that are being underwritten, and thereby being able to enforce the provisions of that insurance policy.
Thank you, Dr. Armstrong. Again, I think for reiterating a couple of important points there, just the growth of the low-cost housing and the importance of private capital, potential for private capital to come in there, and the recapitalization of insurance that's opening up new opportunities for the sector. I do want to go to the last segment of this discussion, but before I do, I want to remind our audience to please send in some questions. We've got some esteemed panelists here who I'm sure would love to answer your questions, so do send them in. I will be moving to any audience questions that have come in very shortly. But just for that final couple of questions in our core discussion, Toki, I want to come to you on the African Continental Free Trade Agreement. And I just wanted to understand from your perspective, what are you seeing as the impact so far? Are there some initial teething challenges that you're seeing companies facing? It would be great to get your perspective there.
Thank you very much, Melanie. I'll start by looking at what the benefits are meant to be, so we know what the challenges are that we're facing or that we've noticed. So first of all, this agreement is actually meant to create a single market of 1.2 billion people with a cumulative GDP of $3.4 trillion US. It's meant to liberalize trade across borders, across the continent. It's also meant to accelerate the establishment of a continental customs union, which will address issues of high tariffs and trade across our regional economic communities that already exist on the continent. It's also meant to allow for us to leverage the dynamism of the African market and allow several of our economies to grow, increasing our rising middle class and expanding the prosperity across the huge population of young people that we have. UNCTAD already says that our nominal GDP on the African continent could actually triple from $1 million US to 6.7 million by 2030. One big thing about the AfCFTA is that it's actually meant to foster industrialization across the continent, enhance competitiveness on the continent, create opportunities for scaling production, market access across the continent, also to help us on the continent to better realize or better be able to exploit the resources that we have. Africa is really rich in resources, and we need to be able to exploit that. So this could almost double our manufacturing output from about 500 billion that it was in 2016 to about 930 billion US dollars in 2025. It's meant to help us address our multiple and overlapping memberships across African countries. We have all these several communities with all their various rules and regulations around trade and trade facilitation that all needs to be harnessed and unified. Of course, to facilitate the movement of capital, persons, and goods, create employment opportunities, and strengthen our regional value chain, because there's so much we could do in unifying this from source to market right across countries. So what does this mean? So this means that the challenges we're seeing so far because one thing we've done at the Lagos Chamber is we've sort of put ourselves forward as a strong partner in this effort. The National Action Committee held a joint program creating business, and I know that they're doing that state by state. So for Lagos State, they collaborated with the Lagos Chamber to create awareness, because there are quite a few challenges we're going to see. One of them is the fact that many of us countries in Africa are dependent on commodity commodity production and export. Not enough value addition is going on. We also need capacity, institutional capacity around our rules of origin. And especially now when we need to ensure that goods are not smuggled into the continent from outside of the continent, and put in the market as originating from Africa. We need to deal with our non-tariff barriers across the continent. There are many markets on the continent that are underdeveloped, and they do suffer from trade supply constraints. These are things that could hamper the objectives of the AFCFTA, and we need to be able to address those and streamline them. We've talked already about what's happening with our infrastructure development and what's happening with traffic infrastructure. But right across the continent of Africa, there's inefficient transport infrastructure. So many of us are still connected to our colonial masters, and things have to go out of Africa to come back in, which frankly is quite ridiculous. We have very poor trade logistics, unpredictable nature of our trade policies across the continent, and that actually causes us to have very high trade costs on the continent. We also have policy constraints around port clearance issues, around import and export documentation. These are some of the things, some of the challenges that we have. Where Nigeria is concerned, there's quite a bit of work that's being done around creating awareness. The federal government has also appointed what they call champions for the policy to help drive conversations around certain sectors that are of great importance to facilitating trade, such as maritime and so on. They all have champions. There's a lot of discussion around the union and what needs to be done there. The Secretary General of the AFCFTA Secretariat, based in Accra, has visited the chamber this year. We've had long conversations with them. I know they're working hard and they continue to drum in the message that the AFCFTA agreement is about the private sector. It's about galvanizing the private sector to take advantage of this huge market and do what private sector knows how to do best around investments and creating those products and services and goods that would help to increase the prosperity of Africa in the long run.
Thank you. Thank you so much, Toki. Again, galvanizing the private sector. I like the focus on fostering industrialization as well as a prime objective. But of course, thank you for touching on some of the challenges that businesses and institutions are still facing, particularly around the institutions around rules of origin. So I think that was really useful to our audience. I believe we do have Ebije with us now. I just want to check, Ebije, if you can turn on your camera. It'll be great to ask you a couple of questions as well.
I think Mrs. Mo, she's trying to.
Thank you so much, Camelia. So I think to wrap up or to round off the segment of this panel discussion, we'll have a short presentation from Dr. Akin. So if we can have the slides up on the screen, and of course, Dr. Akin, if you can have your camera on as well, it'd be lovely to see you.
Okay, thank you. Can you see the presentation?
Yes, I can.
Okay, if you could just change, I know we're short of time now, so I'm just going to rush through this. Essentially, we've all talked about the reset button that COVID-19 has impacted on us. Next slide. I think we've talked about this. This is essentially the state of the economy in terms of the public sector. And in these slides, I've tried to tailor it towards the health sector and to show that really there isn't a lot of money in the cost of government because the debt, which is so high, as Toki mentioned, the total debt is almost 33 trillion. But how does that relate to us in health? And essentially, you can see there that our total expenditure on health is about 10.5, and you know, that's a sizable portion of our fiscal deficit. And then the last column there shows you what, sorry, go back one slide. It shows you that where Nigerians are spending, how they're spending money on health. And essentially, they're spending it out of their pocket. You know, so it's coming from the private sector into the health economy. But it's not been a very small proportion of that is government spend, almost about 14%. So it shows you that there's a lot of traction in the private sector, and it behoves government to take advantage of this and to form significant public-private partnerships that are going to not only create a vibrant health economy, but also provide the much needed services that Nigerians are leaving the country for on a daily basis. Let's have the next slide, please. Next slide. So essentially what we've done in Lagos is to COVID-proof the economy. And how have we done that? Well, obviously, we recognize that certain sectors have suffered seriously, which are the entertainment and service provision. But we've moved towards the digital economy. We've moved towards logistics. Logistics was a very major component of the COVID response. And it's shown us that, you know, improve logistics, it transcends the entire health service provision and makes things faster and more efficient. And so for us to protect Lagos from multiple sequential waves of COVID, we've generated this system that in itself is driving the economy and creating opportunities for Lagosians to participate in a resilience strategy for the state and for Nigeria. Could you move the slide, please? So a natural pandemic goes through multiple waves. And next slide. And you can see here and if you can look at this not so much as a crisis, but as an opportunity. So the government needs to build more resilience into the system to improve its personnel, its infrastructure, digital preparedness, policies and guidelines. You know, the policies, we really need to have a look at our state and national policies now and see how they make sure that it commits government to greater spending in health, all the other facets of developing human capital, but also ensuring that it's encouraging our nationals to go towards a health insurance scheme that is a collective asset that you know, states and government can use to boost the health sector and create a dynamic scenario. So if the government in between waves or in between pandemics needs to be able to drive this agenda and make sure that that is a contributor to the health economy. Next slide, please. You can move to the next one. So this is a very important slide, and it shows you, everyone talks about flattening the curve, but you know, it's not so much about flattening the curve so that you're not overwhelmed by a pandemic. And this is what we did in Lagos. We were able to flatten the curve with public health interventions, but the broken line there is the state's capacity to deal with a surge of patients. And you can see that the broken line is gradually increasing over time. which is a reflection of the amount of money we've put into infrastructure, we've put into human resources, we've put into digital systems, and we've put into other facets of resilience and reduction of vulnerability to shocks and biological agents. So I think I'll stop there, because I really just wanted to say that the job of the Ministry of Health in Lagos is not just to help its citizens, prevent them from getting sick, and when they do get sick, help them get better. But you can see in the COVID response that it's really shown us that health is a significant component of the economy and security. And without good health and the opportunity for citizens to earn a livelihood, it can plunge the environment into a state of insecurity, as we've seen across the country, accumulating with other factors such as climate change and bad governance across the sectors. All these contribute towards the state of insecurity that we're seeing, and it behoves us to look at these facets, and deal with them square on. So I thank you for your attention.
Thank you so much, Dr. Akin, again for reiterating the importance of this sector, and essentially how it's really the issues in healthcare have come to the fore because of the COVID-19 pandemic that we've been experiencing since last year. I now do believe that we have Ebehije with us. I do want to just test that if we can turn on her camera or if your audio is available, Ebehije.
Yeah, I can hear you. I'm not sure the camera is working. Melanie?
No problem at all. Lovely to have you. Lovely to have you join us with or without the camera. No problem. I think we all want to listen to your views as well. And I do have a couple of questions for you. Again, just we discussed the state. I apologize. It's a bit of a technical glitch, but we discussed the state of the Nigerian economy, some of the challenges they're facing. And what I wanted to come to you about was sort of the digital transformation that's taken place globally. Digital transformation has accelerated during the pandemic. And I think in Nigeria, governments, local authorities, and businesses have gone direct to mobile. And I think the quarantine is the perfect occasion to make electronic transactions standard for all. So in what ways might Nigeria leapfrog ahead in its digital transformation? It'd be lovely to hear your thoughts.
Okay, thank you so much, Melanie, and apologies, the camera is not coming on, but it's been great. I mean, I've been listening to the speakers, and it's really been very informative, especially the last one. Now, mobile money has really transformed access to financial services in Nigeria, and indeed the wider Africa, when we look at it from an African landscape. So through digital partnerships, we are developing, scaling, and also bringing locally relevant fit-for-purpose solutions to the entire ecosystem. MasterCard, for instance, have been able to connect telcos, digital e-tailers, as well as fintechs to consumers and small businesses using our technology solution, platforms and propositions that enable a superior digital experience and drive greater inclusion for people across Africa. Now, the growing reach of mobile technology has really presented the payments and technology industry with a tremendous opportunity. You can even imagine, I mean, to be able to build safer and more convenient ways for consumers and merchants alike, including those in the informal sector, to be able to buy, to spend, and save, as well as invest. When we look at the EFINA survey of 2020, that's the EFINA Access to Financial Services, it shows that the phone ownership in Nigeria has increased, with 81% of Nigerians now owning a mobile phone. So through partnership, we can achieve digital payments in an economy that includes everyone, that can help mitigate the cost of cash, because the real issue is cash, and then also achieve sustainable economic growth and inclusive well-being that we all want for Nigeria. For example, in Nigeria, less than 5% of consumer payments transactions are electronic. And so the real challenge here is cash. So migrating payments to the digital space will allow people, including the unbanked, to become financially included. And then the economy will begin to thrive. So if you take, for instance, let's just take a very simple example. A farmer who is able to sell their produce in the marketplace app will allow their payments and receivables to be recorded digitally. And when you are able to do that, it will enable them to have access to credit. Why? Because now they can capture the flow of funds from the farmer. And then this will also now help them to be able to get that funds that is required to be able to access more seeds for growing. So at MasterCard, our strategy is to help grow the digital economy. And when we say the digital economy, it also invariably means that as you grow the digital economy, you are growing the economy itself. And you do this by connecting people, the businesses, and countries to our innovative technology and global network. Helpful tools like products and insights are enabling small businesses to take their business online and make it easier, safer, and more secure for individuals to pay digitally. So when we leverage the global payment capabilities, local innovations, and partnerships like the mobile that you talked about, the mobile networks, the fintechs, the banks, and the government alike, then MasterCard over the past few years have introduced a number of these solutions in transforming the digital payments ecosystem in Nigeria. I take, for example, the MasterCard and the MTN that we recently partnered to enable millions of consumers in 16 countries across Africa to make global e-commerce payments through their smartphones safely and securely. So this kind of partnership will help overcome restrictions faced by consumers and merchants who want to have their business done even here locally.
Thank you so much, Ebehije. I think the power of digital partnerships is really what you emphasize. So thank you for sharing that. Just I think a final question from me to you is, I mean, building on what you've just said, what will the financial landscape in Nigeria look like after the pandemic?
Okay, thank you. That's a great question. You know, as such, the only sustainable growth is inclusive growth. We just have to know that. We must be able to connect everyone. Wider adoption of electronic transaction, offering choice through new emerging payment methods, embracing digital operations, and collaboration through public and private partnership are key to connecting more people to the digital economy, and everyone can benefit. Now, as the world went into the pandemic, which we saw the lockdown in 2020, consumers shifted their spending habit to embrace contactless tap on phone payments and online shopping. People were afraid of touching, and so contactless tap and phone go payments became the in thing. So as store closed, social distancing took place. Retailers worldwide, they moved their businesses online and embraced e-commerce and explored potential for new ways to pay. MasterCard latest research showed that the adoption of new payment technology is rising, and consumer appetite for new, fast, and flexible digital experience continues to grow. For example, when we look at the MasterCard New Payment Index, it shows that a rising uptake of emerging digital payments method, and that's what you're going to see after the pandemic. Today, 96% of Nigerian consumers will consider using at least one emerging payment method, such as biometric, contactless, the QR, or what we call the quick response code. 73% of Nigerian consumers said they are likely to use digital wallet next year. These are some of the outcome of what has some of the outcome of the pandemic that took place. So people are moving towards that digital, and that's what should be encouraged. So contactless payment technology, for example, is a catalyst because it is fast, it is secure, and it is touch-free. So if we look at between the first quarter of 2020 and the same period in 2021, more than 100 markets saw contactless as a share of total in-person transaction grow by at least 50%. So a year into, after the COVID-19, contactless is showing staying power in dynamism. And in the first quarter of 2021 alone, MasterCard saw 1 billion more contactless transactions worldwide as compared to the same period of 2020. So if you ask me, going after the pandemic, contactless will play a significant role. All signs point to continued growth to the path of contactless, where with nearly 7 out of 10 consumers globally anticipating use of contactless card this year. So Mastercard Economics Institute in 2021 estimated that 20 to 30% of COVID-related surge in e-commerce spending will be a permanent feature in share of overall retail spending. So we are actively engaged to build the domestic payment ecosystem in Nigeria, connecting partners to each other through digital solution and technology. So we are extending acceptance, infrastructure, and aiming to connect 1 billion globally to the digital economy by 2025. And this will bring us, closer to a thriving world beyond cash. Thank you so much, Melanie.
Thank you. Thank you so much, AJ. And I think you've really rounded off this discussion so well. And I think my favorite line is definitely that sustainable growth will be sustainable only if it's inclusive growth. So thank you once again to all of our panelists for your time, for your insights, and thank you for your to the audience for listening into this discussion. Please stay tuned. We have a wonderful keynote speech coming up and a second panel with some more exciting insights.
To be here. I've really enjoyed listening to the speakers in the first panel. Very enriching. Great to see people that I recognize and have been on this trajectory for a long time. So we're really speaking with captains of industry. We are speaking to people who are leading things now on the private sector and the public sector who believe in what they say. I see that we're trying to project. I don't know if we can see my slides right now because I can't see them, but I will just carry on. Can you just give me a sign that you can hear me? And if you can see the slides?
Yes. Can you see the slide? It's on.
Okay, I can't see the slides, but I'll just carry on. Okay, so I'll just move between slides and speak to it. Really, the second slide is I can't see anything, so I will just do this blind. The second slide really speaks to the title of this theme. I think my job is to really just take the 10 minutes and inspire thought, provide some kind of an interlude and connect the dots. And the pictures and the images I've chosen in the second slide and a few other slides is really about an artist. You'll see his name, Dr. Larry Tejershaw. I called him Doctor. Because he has really invested his life in creating art out of waste. And that really is the theme of the conversation today. And if you move on to the third slide, it really speaks about moving from hope to action and gives an overview of how I see this and what I want to talk about for the next 10 minutes. And also shows clearly that in order to address some of the key issues we want to talk about, we're going to have to move from thought to action. Specifically, I wanted to call out Professor Akin Bayani spoke about the private sector being 30 times the size of national revenue and being key to harnessing the nation's social safety net. And I think that's a really important point to take into cognizance of. Behije, you spoke about digital inclusion and financial inclusion, and generally speaking, how critical it is that when we talk about national development, we talk about inclusion, digital, financial, social, economic, environmental. Armstrong, and it's very good to see you again, talked about the importance of the fintechs and innovation brings, and Toki brought a very good Pan-Africa perspective, and also, of course, the perspective of, which is something she has stood for from the beginning, building SMEs into the mainstream, and I'll get to that as well briefly. Speaking to slide 4, which is really the wheel of moving from hope to collaborative action. It talks about the fact that we need to also include people, planet, and profit in the way that we see things. And I wanted to speak specifically to, especially because I'm wearing the hat of the chair of the Circular Economy Innovation Partnership. The idea behind that is really to ensure that we really look at natural capital as a very, very important source of capital that we often ignore, so that in that regard, ensuring that we're financing not just waste streams and recycling them, but actually an entire revamp of the way that we see the economy. And that's what slide 5 speaks to, where it tries to offer a definition of the circular economy and essentially talks about sustainability, which is now a buzzword, as an innovation challenge. And circular economy is one of the more inclusive main means of co-curating a new kind of economy. We're actually looking at something that appears to be a threat, actually only serves to improve profits. I don't know if we're on the same slide. I'm on slide 6 now, where I'm talking about the link between, again, with another picture of Lanre's work. If we don't align what we're thinking and what we're doing, we're not going to be able to move. So one of the things that's really important, and the reason why I think this forum is so important, is just the whole idea of, on the one hand, and we are a research partner to CT Productions, who represent The Economist. It's so important to make decisions based on evidence, based on data, based on facts, and facts that we can very quickly turn around and use, so that our thoughts are aligned with our actions and we're able to achieve results and close gaps. We call that the sustainability gap, where I come from. Number 7 really is just testing your mind and trying to suggest that, I don't know whether you're still seeing the slides or whether I should just speak without slides.
Can you see the slide? The slides are up.
Okay, I can't see them, but I'm using mine. So if the slides are up and they're helpful, then it helps. If not, then I'll speak as if I don't have slides. So if everybody can see the slides, I'll continue.
I can see
really,
slides.
Okay, so what you see now is you see a question that says, how does sustainability, circular economy, ESG risk and compliance management? Is that the question you see?
That is correct.
Oh, brilliant. Okay, excellent. So this is really a prompter. So a lot of the time we see sustainability and things like circular economy or ESG risk or even compliance with public policy as a nuisance. However, when we see it in the right way, because as we said at the beginning, if we don't have the public sector and the private sector really working together to also ensure that we're achieving social, environmental, and economic impact, we're not going to achieve this major objective that we have. And so one of the very exciting bits of work I was allowed to do for 3.5 years for a company called Dangote, when I was initiating their sustainability function, was really aligning public policy and public value creation. I'm on slide 8, with the 7 pillars of sustainability and the way, well, that's the way that I see sustainability. And what this did is that it was able to align, on the one hand, the company's personal or corporate profit drive with its economic growth objectives, its stakeholder inclusion objectives, and its objectives to improve its social, economic, and environmental impact. And that ability to simplify this or almost domify it made such a huge impact to how we saw things. I'm on slide 9 now, which shows you the different pillars and talks to you about identifying environmental, social, and governance factors, which typically are seen as risks or nuisances. But you see, when we look at ESG properly, what happens is we're able to build resilient businesses. The businesses that did the best during COVID, and I'll run through a few at the end, were the ones that took ESG into cognizance, that were looking at public value creation, and were in alignment with government's overall objectives, and were open to innovation, and interestingly also, open to younger startups and MSMEs. So larger organizations that were open to that were able to do better. The cultural pillar speaks about homegrown businesses. Once the borders shut down, if you are aware or trying consciously to promote local value, you do better. Operational pillar spoke to innovation and solutions-driven businesses. If that is the approach of your business, if that's your culture, you would have done better during this period of time. The financial pillar talks to the increasing growth. I know integrated reporting talks about capital. I like talking about 7 capitals. And of course, one of those capitals is natural capital, and taking a completely different view of that. And most importantly, the 3 pillars at the end, the environmental, economic, and social, means that we're talking about sustainable, inclusive economic growth, which is, I think, what MasterCard had mentioned. If we don't have that, we're not going anywhere. These 2 slides, I'm looking at time, we're going to skip. But really what they speak to, again, with 2 absolutely brilliant, beautiful pieces of art that are made out of waste. And that's the reason why I love using them for my presentation, because they're so beautiful. They're made out of our Nigerian waste. They're made by a Nigerian artist, and they're actually helping to mitigate climate change. And some of their meanings, for example, some of them speak to or underline the dignity of those people who walk around carrying goods on their head. And it's interesting because even though those are local vendors, the point is it actually contributes towards the health and the stature of Nigerians, because it keeps us walking straight, and it makes sure that you actually have the convenience of buying goods out of your window. But above all, it puts food on the table. And one of the key issues, for example, climate risk, which we're always measuring off sometimes against, I'm on slide 10, I'm going to go to slide 11, which we're often measuring up against, can we really prioritize the environment when we have social and economic things that are such a huge priority? The point is that they're combined. And increasingly, everywhere else, you're seeing that natural capital, not just in terms of carbon credits, but actually in terms of I call it the 4th revolution, have a huge opportunity to generate us better revenues going forward, simply because of carbon sequestration opportunities and the amount of positive impact we have on the environment, which we're not measuring at the moment. There's a huge movement in that regard that is worth taking note of. Slide 12 I'm on right now. What does social, economic, and environmental inclusion matter? Why should it matter? And it does matter because investors are looking at this much more thoroughly. COVID has accelerated this. So even in terms of our being able to access capital, not just from a business perspective, but financial rating agencies for our corporates and even for our country ratings and the costs of capital, this is going to become increasingly important. I'm on slide 13 now, which talks about public value creation, which builds resilient, sustainable companies. And if indeed our private sector is 30x of our public sector's revenue potential, then clearly public sector, private sector really has to work more closely with another. I'm coming to the point where I'm talking about examples and methodologies and the importance of sustainability governance. And again, the importance of ensuring that we build resilience and sustainability into this better economy going forward. And that we keep in mind that those inclusion targets are really important. And of course, in that context also, accountability and transparency actually builds more resilient companies going forward. Slide 15 really just puts social value creation at the center of the equation. And slide 16, if we are there, speaks to a particular case study of social impact methodology process. I'm going to skip it because we don't have that much time. But needless to say, over the last 21 years, there are entities, and I've chosen one in particular, that have worked at the bottom of the pyramid, working with larger companies in compliance with national objectives, so public sector value creation objectives. And I will just cite 2 examples. One of them is during the COVID era, a 7-year-old project that GBF had run with Unilever. Rather than reduce sales during COVID, we found that sales were increased during COVID, partly because it's a door-to-door model, but partly because a large company was able to use, through a local nonprofit, namely the GBF, use women who were trusted in their communities and who were able to innovate even at the micro level in times of change. Or if I use the slide 18 example, which is actually a MasterCard Foundation funded project, again implemented by GBF, it was about finding youth and connecting them to work, but again, working on a methodology that really looked for what already existed locally, wasn't trying to impose a new system, but was really asking questions about what is there on the ground, what can be done, and where can we move to. And I'm now on the last slide, which is slide 19, and which speaks to we move, and which closes with the whole concept of the circular economy, and where I wanted to speak very briefly to what I see as the core potential that the circular economy has in Nigeria. And the truth is that in terms of mapping Africa's future, which some of the speakers have spoken to earlier, what is really increasingly important is not just that we're aligning the public sector and the private sector, but also that we are aligning people, profits, and planet. And so from that point of view, my argument has always been, this is not new for Africa. It's not new for Nigeria. If you look at the slide that's on there right now, which describes the circular economy, it really talks about reusing assets, sharing assets, repairing assets, refurbishing, remanufacturing, and recycling. My former boss at Dangote and one of my mentors speaks on the next panel. So I'm sure he'll speak to that because he's also the president of the Manufacturers Association of Nigeria, or, you know, my Egbon, while we were doing the task force on the petroleum industry bill, Austin Olorunshola also speaks very closely to these factors, whereby really what our people have always done, and just go to the computer village to see an example is that we have always used and reused our resources more and more efficiently. So what the world is calling circular economy is something that is intuitive and intrinsic to us. And it's the reason why certain things we've been able to leapfrog in Nigeria. And I just want to end with a reminder of that. First of all, on telecoms, we talked about the fact that we have 81% saturation, and I'm sure it's even higher, of mobile telephony in Nigeria today. Imagine if we had to follow the track of fixed line telephony and not leapfrog straight into mobile and wireless at that time. I happened to work at the Nigerian Telecommunications Commission, you know, many moons ago now, and I'm very proud to be part of that revolution, which really changed many things and put Nigeria in the leapfrog ahead of many other nations that had started before us. The thing I call the second revolution is of banking and finance. And again, you're seeing that with fintech, with some of our larger fintechs actually very rapidly moving into unicorn status and being acknowledged and recognized and invested in by global players. I mean, I do some angel investing. So when Armstrong Takang was talking about that, I thought, I'm so glad that government is beginning to realize how important a sector that is. But in banking and finance, again, we saw a revolution. Right now I'm in Germany, and when I make a payment, my phone doesn't tell me I've made the payment. In Nigeria, we take that for granted. There's so many things we've innovated in that space that we're not actually exporting to the world, and we ought to. The third revolution, which is going on quietly, is in environment. It seems like it's being forced, but on the ground, again, I use the example of circular economy, which is why I want to end with this slide. We already have the culture of circularity, of not wasting. It's the way that when you buy groundnuts, you're actually buying them in a recycled bottle. Or if you're buying, well, many of you probably don't, but many people buy engine oils also in recycled bottles by the side of the road. So in other words, we have the culture. If you think about the way we used to wrap moi moi in banana leaves, it was actually much more environmentally friendly than when we started using plastics. So actually, we are going to be going back, but back in a positive way. We don't need to see that in a negative way, back to what we already know. And maybe the fourth and final revolution that I'll end there is really blockchain-enabled economic inclusion and personal fulfillment possibilities, where we have the opportunity to change the structure of how our societies work. And we're able to rebuild trust that that essentially includes sustainability, innovation, and above all, inclusion in the way that we serve people's needs. I've heard talk about shelter, ensuring that we're able to provide affordable housing, access to capital, digital inclusion that goes beyond financial inclusion, but of course, digital inclusion enables financial inclusion. When you talk about sustainable mobility or food security, very importantly, using and enabling producers and farmers and industry processors and consumers to connect with each other and actually crowdfund or support each other financially. All of these things actually are much more possible now, post-COVID, because we have been forced to shift into a more digital economy. And we've been forced to take inclusion as something that is a real priority for our community, for our society, for our economy, for our polity. And so I see the title, and I'm on my last slide right now, I've concluded. I see the title of Nigeria's Hope Horizon and getting back on the growth trajectory as very timely. And I think that the fact that we have all spoken about inclusive growth is so critical, and digital and financial inclusion that positively impacts us socially, economically, and environmentally, which of course includes absolutely health, is so central to the future that we're building. And this is where I would like to stop. I hope that was audible.
Yes, I heard you very well.
Thank you so much, Dr. Ndidi. I'm not sure if we still have Camelia with us or whether Bawaji will step in for a moment. If not, I'm happy to carry on. So thank you once again for such an insightful presentation on a concept that is becoming the core of many economies now, the circular economy. And I think it was had a lot of valuable insights for so many of us. So thank you once again. And I am very excited to now kick off the second panel for today. Thank you very much to our audience for staying with us. We have a lot more fantastic insights for you in this next panel, which will focus on some of the strategic economic sectors in Nigeria. And to contribute to this, we have with us today Osasua Osayi, co-CEO and co-founder at FarmForte. We have Ese Avanoma, Managing Director at Braid Group. We have Austin Rodonsola, Chairman of the Energy Institute of Nigeria. And we have Engineer Mansour Ahmad, President of the Manufacturing Association of Nigeria. A warm welcome to our panelists. And once again, just a quick reminder before I kick off the discussion for our audience to please send in some questions that I can pose to our panelists towards the end of the session. And now I do know that we have Engineer Mansour with us just for a short amount of time. So I would like to start off with Engineer Mansour. If you're able to turn on your camera, please, and so that I can check your audio before we get started. Engineer Mansour, are you with us? Hello? All right, I'm not sure if we have Engineer Mansour with us.
I'm not sure if Engineer Mansour is on, but I think you can hear my voice. So maybe we can move on.
No problem. No problem at all. All right. So I think what I wanted to start off with was just how some of these key sectors have navigated the pandemic, because there's so many learnings from that. And Ese, if you are online and if you can turn on your camera, I would like to start with you. Ese, are you online?
Yes, I can hear you. I don't know if you can see me.
Are you able to turn on your camera? It'd be great to see you.
Unfortunately, I can't. I'm struggling to. I just can't turn it on.
No problem at all. We can hear you, and it'll be great to hear your insights. So I think my first question to you, of course, is about the oil and gas sector. Of course, it was badly hit last year because of the slump in oil demand. But I think within the oil and gas sector, the, the upstream, midstream, and downstream segments did perform differently. So what does the outlook for the oil and gas sector look like in Nigeria?
I think it's looking good. I'll say that prior to COVID, we must realize that we faced the biggest downturn in the history of oil and gas, which started in 2014. We barely recovered from that before COVID came in. So if you look at it, there are major issues that the oil industry in Nigeria has faced recently. We have the oil downturn, we also had COVID, and we also had the oil glut. Also, as a result of the shale development in the US. So before COVID, Nigeria was struggling to sell its oil as a result of the coming on of shale, which pretty much took out market share for Nigeria's oil. So all of these challenges have been facing the Nigerian oil industry. Now COVID came, we survived it. There is huge opportunity for growth in the Nigerian oil and gas space. Huge opportunity for growth. What the government is currently trying to do is to increase reserves, and that's fundamental to improving the oil industry in Nigeria. OPEC will allow you to sell oil based on your reserves. Nigerian oil reserves has been pretty much stagnant for many years. Currently, we are 32 billion barrels oil reserves, and recently we moved on to about 206 trillion cubic feet of gas. If we can increase Nigeria's reserves, that will be very good for the economy. And currently, we see a lot happening to increase these reserves. Marginal field bid round, a lot of projects that are about starting. So without any major growth in the past few years, it's just about time for the Nigerian economy to appreciate growth in the oil and gas space as we improve activities in the oil industry. So I am very positive with what's going on. I see a lot of synergy between the three major arms of government controlling the oil and gas industry: the DPR, the Ministry of Petroleum Resources, and the NNPC. These structures have come together to improve some of the policies and drive growth in the Nigerian oil and gas space. So as we aim to increase reserves, which is bound to happen, Nigeria's production will increase and the economy will definitely benefit as we get more foreign exchange from the oil industry.
Thank you so much, Ase. I think again that story of recovery for the oil and gas sector in Nigeria will be encouraging for the economy. I do want to turn to Austin now, just again for a broader view on the energy sector. Some of the challenges. Can you tell us some of the challenges that the sector faced during the pandemic, particularly on power generation, if you can comment on that? But I think also looking to the future, how can government and stakeholders in Nigeria evaluate the options that are available in terms of the different energy sources, and how can that be assessed in a holistic way? It would be great to get your thoughts, Austin.
Okay, thank you very much, Melanie. Can you hear me very well?
Yes, I can hear you. I cannot see your camera on, but if you're able to turn it on, that would be fantastic. If not, please do carry on with your response.
I think I'll just carry on. So Again, good morning and many thanks for having me join you. It's always great also listening to Ndidi. I think we've been on this same journey for quite a while. But much more for me is really the encouragement from hope to collaborative action. And frankly speaking, I see a lot of that happening at this point in time. So I am really, really excited where we are as a country, but more importantly, in the petroleum or generally in the energy sector. And I think Asa touched on it already. I think for once, of course, oil went negative sometime last year during the peak of the COVID, and everybody was more or less either confused or almost really hopeless at that point in time. In Nigeria, of course, we had our own serious bit of it, not just because production went down, of course, prices also went down. So revenues, of course, completely froze up. And it affected every aspect of our economy. Of course, we all know that whether we like it or not, oil will continue to be the main cornerstone of the Nigeria's economy. And the way I always say it is that we always really need more oil to actually get out of oil. And I know we've talked so much about diversification, but really the best way to get that done is to even bring more oil into the market, first and foremost, which of course ties in with what Ese was saying, growing your reserves and getting more allocation to produce actually much more oil, but then closing that loop and making sure that you actually channel the resources to actually really then diversify the economy. I think looking at our industry, I will almost say that whether by stroke or luck or somehow, I think COVID is for us is almost an opportunity really rather than anything else. When I see what has happened in the last 12 months, it's really unbelievable. Quite a lot of things that and really this is what gives me hope. Quite a lot of things that we thought were completely impossible were resurrected, and I can give you a few of them. So if you start from the recent Train 7, for example, that the groundbreaking happened sometime last week. It's been on the table for 15 years, and everybody thought that, well, it probably will not happen again. But 3 weeks ago, the Bonga renewal also happened. That too had been on the table for over 10 years. Marginal fuel bid rounds, even though it's a bit kind of haphazard, that too had been on the table for over 10 years. I tried to do it when I was Director of Petroleum Resources. We made announcements, we did everything, but it still didn't happen. That has happened also. And of course, the biggest of them all is the PIB, which is basically the reforms that started April 2000. It hasn't gotten concluded, but I can tell you in the next 2-3 weeks, we'll be hearing certain things within this space. So I see quite a lot of hope to action, which is basically what our keynote speaker was basically saying. It's not just hope now, but we're really, really then seeing actions really on the table. So I'm really excited. Thank you, Melanie.
Thank you, Austin. Hope to action. I really like that phrase, and again, something I hope we can see more of in the near future. I do want to pivot to Osasua to talk about the food and agricultural sector. Of course, Osasua, the pandemic-related supply chain disruptions were among the hardest for food and agriculture, given the perishable nature of the goods. So what strengths did the Nigerian agricultural sector exhibit during the pandemic that you think will carry the sector on going forward? Osasua, I just want to check that you're with us. Osasua, I think you're muted.
Yes, I am.
Perfect. And are you able to turn your camera on?
Yeah, I think it's on. I don't know if you can see me.
Yes, fantastic.
Yes.
I can see you. That's lovely.
Great.
So I hope you caught my question, but just about your sector, food and agriculture sector experience during the pandemic, and what strengths I think will sustain the sector going forward.
All right. Thank you so much, Melanie. I mean, as we all know, the COVID-19 pandemic was one that took the entire world by surprise and sort of introduced unexpected disruptions on food systems, which created a lot of challenges across the world, not just in Nigeria. But we found it quite remarkable, the speed to which supply chain actors were sort of able to reorganize themselves and ensure the continued availability of food, despite the global situation. There are a number of ways that the agricultural sector sort of showed strength, and I'll just narrow it down to a few points. I think one of the top for me is new market opportunities. Prior to the pandemic, China was or still is, but prior to the pandemic, were the largest suppliers of ginger to the European market. And when there was a complete shutdown of the Chinese border, there was a huge scarcity of ginger on the EU market, with prices spiraling over 300%. So I know for sure there were a few Nigerian companies that were able to fill in that supply gap by supplying Nigerian ginger to the EU. And even the feedback some of these companies got was that from the customers was that Nigerian ginger has one of the highest pungency in the world, which means it has one of the best internal characteristics. So that was one way I believe it showed strength. The second largely is around economic diversification. The pandemic heightened the importance for us as a nation to look inwards and start to focus less on oil and more on sectors like agriculture to produce the food we need while creating jobs. And that's largely because Nigeria holds over 80 million hectares of arable land for agriculture. So there's no reason why we shouldn't be self-sufficient in food production as a country. Also, growth in agriculture has been proven to be 2 or 3 times more effective at reducing extreme poverty, promoting economic growth, and ensuring food security than any other sector. The third point I would mention would be enhanced digitization. The pandemic sort of helped awaken immense opportunities in the food and grocery e-commerce space. For us as a business, as a business at FarmFort, I would say one of our biggest strengths during the pandemic was resilience in the face of adversity, and the fact that majority of our 112,000 farmers we have in our network are smallholder farmers, meant that they could gain access to their farms during the pandemic, despite the restrictions in movement. And I believe that resilience is definitely needed to keep the sector going for years to come.
Great, thank you so much. And I definitely want to come back to the role of technology in supporting growth a little later in the discussion. I do want to go back to Austin now, just about a really critical question. When we're talking about the future of these sectors, and particularly energy in Nigeria, with so many institutional investors now divesting from oil and gas and from their portfolios, with so much pressure to meet increasing sustainability or ESG standards, how is the oil and gas or the energy sector in Nigeria navigating this?
Thanks again, Melanie. So let's be clear. The international oil companies are simply responding to the pressures of energy transition. Okay, and as you know, the pathways to it really differ from country to country, as well as from company to company. We, as a country, we haven't formally launched what ET, energy transition, really means to us, but the bits and pieces of it are really coming together, because the train has already left the station anyway, and you better join or simply not on it, as simple as that. So yes, indeed, we're seeing quite a lot of divestments by IOCs, of course, largely driven by.
It's going to be what you eat first thing in the morning.
Oh, somebody is talking at the back there. Of course, largely driven by a lot of pressures.
Talking to switch off now, switch it off. Thank you.
Yeah. So because of course oil and coal contribute the greatest carbon emissions for sure. The outlook is that there could be significant decline, of course, in demand for crude oil mainly within the next, say, foreseeable 15 to 20 years in order to meet globally acceptable emissions reduction targets. So really, that's why that pressure is on. But given the struggle for energy and economic security for Nigeria, and of course, indeed, Africa at large, our own pathway certainly has to be different. It can't be the same as, say, any other country or region, or it cannot even be defined by any of the IOCs either. So as IOCs are jettisoning assets, for example, Nigeria is looking at it completely differently, because we really need to create value and create those values very, very quickly, because like I said, the investment window we see, especially for crude oil, really it's not more than 10 to 15 years. So sense of urgency is really the key thing at this point in time. So what are the key things we're seeing on the table? The first, I talked about it already, in the sense that government is trying to make sure that this legislation that has taken so long a time finally gets on and implemented. In parallel with that, of course, new policies are coming up. And for once, one of the things, the very bold moves the government has also taken, is to move in the what I call an uncharted territory of gas. Over 60 years, this industry has been driven by oil, but the way the government sees it going forward, it's going to be driven by gas. And that's actually why, as a step in the first in the right direction, the first thing is to actually declare a whole decade of gas and support it clearly with very solid policies, and the legislation is coming on. But government is not even stopping at that, making sure also that the whatever you can call low-hanging fruits in terms of FIDs is also particularly happening. So things are lining up really gradually, but like I said, the whole intent is to make sure that you accelerate this value capture before the whole thing really becomes less valuable really going forward. Yeah.
Great. Okay. Thank you, Austin. And thank you for highlighting maybe the growing role of gas within this sector if there is going to be continued pressure to decarbonize or lower carbon emissions. So thank you for sharing your thoughts on that. I want to switch gears a little bit to talking about supporting local growth. And SA, I'm glad that your camera is on now. And I do want to turn to you for the first question on that. You know, there is such an emphasis on ensuring local content and harnessing local expertise, especially in large projects in Nigeria. In the oil and gas sector in the country, what is that best combination of local and international expertise on a large project? If you could unmute, please, Ase.
Sorry about that. There's huge capital knowledge, human capital knowledge in Nigeria when it comes to the oil and gas, and the entire world appreciates the capacity the Nigerian industry has when it comes to manpower. I used to work in a global company where the Nigerian populace was known everywhere in the oil and gas. So we have really developed local capacity over time. And I subscribe to what Austin said about the departure or seeming departure of the IOCs in Nigeria. That space has to be filled. How will it be filled? Over the past few years, the NCDNB has been taking note of performing local companies that do their thing right. Basic things right. Doing it right the first time, your policies, how you work, is your yes, your deliverables. That's very important. And they were working with KPMG on that, identifying local companies that can do very well. So I think that should be stepped up. We need to identify a lot more local companies that can do work. And yes, we have them in Nigeria. The world, the oil industry globally appreciates the Nigerian content. So I think NCDMB is doing very well there. Identify a lot more local companies that can play in this space and can take over. We have Nigerians in every part of the world managing oil and gas projects. So bring them back. Many of them are in country. Use them. We have capacity. The second thing I would also like to suggest, which is actually being done, is how ITTs are given out or are awarded. So if you technically approve 6 companies, why not spread the job finally to the 6 of them instead of awarding it to just one company? That's another way to grow capacity. And we also need to start collaborating as local companies, not just working in silos. That has to be encouraged as well. So if we put all these practices together, I think there's a good mix of local international companies that will take over leadership if they leave. And I'm very sure we have the local capacity.
Thank you so much. That was a really interesting answer with some, I would say, very practical initiatives. So thank you for sharing that. Osisiwa, I want to turn to you a little bit more also on your perspective for supporting local growth. But I wanted your opinion on, you know, setting standards in the industry, you know, to ensure that players, especially with the free trade agreement coming into play, that manufacturers that or producers within the agricultural sector are playing on a level field. How important do you think standards or, you know, establishing common standards are to supporting growth?
Thank you so much, Melanie, for that question. I think it's absolutely important for standardization of the agricultural sector, but it has to be done from a syndicated approach. Firstly, through policy making, where every stakeholder in the value chain plays a key role in setting the standards. So this would include, the government, international organizations, large-scale producers, retail outlets, smallholder farmers, and so on, so that all interests are duly and realistically considered. Also, for international certifications, so for us to play on the global scene as a country, we need to meet the international certification standards. So it's important that there's a presence of certification bodies in the local markets. So in this case, Nigeria, for instance, to be global gap Nigeria, what we call a licensed farm assurer, who would come inspect your farm to ensure all you're adhering to all the good agricultural practices before you would be certified by a certification body. Now, for a smallholder farmer or for small scale farmers, they wouldn't be able to afford this. So for them, I think these standards can sort of be scaled down to what's obtainable in our local markets as a first step. For example, there's also something you call local gap, and then it's a version of global gap, but it's only one level of certification. You only need to pass one parameter of certification approval, as against global gap that has 5 different stringent parameters to be met. For us at FarmFort, we have explored this in a recently published white paper, which we titled Nigeria Agri-Innovation Revolution in Waiting. And earlier this year, we launched an innovation program to sort of take a syndicated approach to tackling many of the challenges faced in the industry, and also starting right from the fields, working with the farmers, training them, giving them the right inputs, and also ensuring they're adhering to very basic standards for a start, and then expose them to the more stringent sort of standards.
Great. Okay. Thank you so much for explaining that. I do want to, just as we kind of come to the end of this session, I do have a few more questions, and I want to quickly touch on the role of technology, as I said earlier, on the role, I beg your pardon, in supporting growth of businesses and supporting the growth of these sectors in Nigeria. So Ese, I'll come to you first. Can you tell us about the role of automation technologies in the future growth of the oil and gas sector? And do you feel that the adoption of some of these advanced technologies maybe is a little further along in oil and gas than in other sectors?
Absolutely not. Referring to your second question. Earlier on, Austin said we have a short timeline, 10 to 12 years. That is perfect. That's exactly what is happening in the oil and gas. We have about 10 to 12 years to make things happen real quickly. What's critical? Policies, creating the enabling environment for the government. And like I said earlier, I'm seeing some synergy in the DPR, the NNPC, and the Ministry of Petroleum Resources to create that enabling environment. In addition, there is a lot of activity. Nigeria cannot even, we are wondering if we have the capacity to sustain fabrication in Train 7, Bonga Southwest, and other projects coming up all in this at the same time. So there is a lot of hope in the horizon. Like you said, what will play a major role in our success is technology. The government wants to cut costs, oil production, which is quite high. One very good way to do that is technology. I mean, we saw what COVID did in 1 year. What we thought was not possible is now possible. My parents can chat on WhatsApp using voice and video. We can adopt that in the oil industry as well. We are used to doing things the same way. That's our style in the oil industry. Oh, that's what I've always done so many years. But technology will change a lot of things. Trainings can now be done on WebEx or Zoom. I mean, not all trainings, but nice to travel, but you don't have to travel. That's one. Business meetings can be done on WebEx as well, or Zoom. That's just an easy way to adapt technology. And in many other things, we are seeing the use of technology to cut costs. The government has identified that. If you're aware of what's going on in Nigeria today, NOJEC, National Oil and Gas Excellence Center, one of the key pivots to change the industry and reduce costs is technology. And in Braid, we've adopted technology as the go-to measure to reduce costs right now. So I strongly subscribe to the fact that we need technology. We need to change and start using advanced technologies in the oil space. We have to learn to do things differently. That's one thing COVID has taught us. What is constant is change, and this is the period of technology. I almost say that technology has handed the world back to the IT industry. We can still use a lot of technology in the oil and gas. America brought shale on massively thanks to technology, Halliburton pumps and so on and so forth. So yes, if you're not seeing ways to adapt technology, please look inwards, check very well. Technology has come to stay and we are using it right now to change the oil and gas industry in Nigeria.
That's exciting, and it's again very interesting to see that you feel we have the sector has a long way to go, but I hope that there is more emphasis on technology to increase productivity and to further that sector. Osasuwa, I want to get your perspective as well on what technology means for the growth of agricultural companies or other food companies, particularly with digital platforms for perhaps sharing information, maybe getting smallholder farmers in Nigeria connected to bigger markets, and then ultimately, as I just said, increasing productivity and competitiveness. Can you tell us more about the role of technology there?
All right. Looking at data from the Food and Agriculture Organization, there's an estimated 33 million people, which is about 13% of all sub-Saharan African smallholder farmers and pastoralists that are already registered for services such as weather updates and market linkages. So this indicates that there's adequate room to inculcate wider digitization and inclusion. If you look at the increased agricultural collaboration between countries, as seen in the recent cocoa agreements with Rwanda and Ghana, this indicates the importance of real-time data to amplify productivity and scale. Also, data-driven technology platforms would present real-time information to potential markets. And small players in the sector embrace and sort of adopt the new technology. The entire value chain, I believe, would become more traceable and coordinated. Technology would also help optimize the sector and create systems that are highly productive, anticipatory, and adaptable to change. This, in turn, I believe, would lead to greater food security, profitability, and sustainability. For us as a business, we've made significant investments to explore the viability of greater on-the-go collaboration between farmers and end consumers through a tech solution which we built, a farmer aggregation platform called AgriLink, which brings these farmers closer to local and global markets. We currently have 112,000 of these farmers signed on the platform, and we look to increase that number to 1 million farmers in the next 3 years. So this, I believe, this is one of such solutions where there's farmers can get real-time access to pricing, which makes them earn better than what they'll typically earn. And then we can, using geolocations, we can know exactly what sort of volumes of products is located in different locations at a particular time. So we allocate the right resources for logistics, which drives costs down. So these are some of the ways I believe that technology would definitely improve the sector.
Thank you. Those are some really exciting examples. And I think, once again, just very concrete ways to enhance productivity in the sector. So thank you for sharing those. I do want to go very quickly to audience questions before we close. I believe we have one, and I would like to request Bawaji to please read out the question. Bawaji, I believe you're on mute.
Hi.
Hello.
Yes, sorry. Can you hear me now?
We can hear you.
Yes,
It's not very strong, the connection, but it'd be great if you could share the question.
Okay, great, fantastic. Yes, hi everybody. My name is Bawaji Adeniji. I work for CT Productions as the corporate communications and business developer. We have a question for Frankfurt, Mr. Osa. Finding opportunity in chaos is often used phrase. Could you highlight Frankfurt's go-forward strategy as African companies attempt to showcase their strengths in a post-pandemic world?
All right, thank you for that brilliant question. I believe that there's a lot of opportunities in chaos, like your question it says. One of the things we've done as a business is sort of identify challenges in the agricultural sector and create solutions to these existing problems. And then when you create solutions to the problems in the sector, you unlock economic opportunities. If you look at sort of national consumption data, Nigerians are spending an average of, I think, in 2019, 57 trillion on food products. And then if you look at what are the top imports of our different food products, you look at rice, for instance, you look at wheat. These are products and commodities that we can potentially grow as a country. And then if we can move from, an import-dependent nation around food, that would unlock a lot of economic opportunities. It would create jobs. It would also lessen the burden on the naira. So I mean, the opportunities are enormous. Like I mentioned earlier, data has shown that growth in agriculture is 2 or 3 times more effective at reducing extreme poverty and fostering economic growth in the country.
Thank you so much for that response. Bawaji, do we have any more questions, or are we ready to wrap up the session?
We can wrap up.
Fantastic. All right. Thank you so much, Bawaji, for reading out the questions. And thank you once again to our panelists who really shed light on some of the most exciting sectors in Nigeria and charting that path forward, and also identifying what's really needed to take it ahead. Thank you very much for your time and your insights, and thank you to our audience as well for staying with us. Apologies, I know we're a little over time, but I think they were valuable insights and worth staying over for. I do want to hand over back to Camelia for the closing remarks and to wrap up today's session. Thank you so much.
Thank you very much. I just want to make sure that my voice is okay and I don't sound like a robot. Yes, I am. I think unfortunately, unfortunately, the rain today with a little bit of some wave interference just changed my voice, and I apologize for this, and I apologize to Dr. Didi because I was so prepared to read all of her bio. She did amazing things, and she really, really is supporting so many institutions and so many, let's say, non-governmental organizations. So I'm sure we're going to catch up with her. You need to know that they are our research also partners in future projects. So you're going to hear from her more. Thank you very much, first of all, to panelists in panel 2. We have such a great relations with all of you. Thank you for your support. And and making this possible. The webinar, but it's not just the webinar, it's also the 2 editions. One is the feature in The Economist that finally arrived to Lagos, and it will be with you soon in the next days, and Focus Magazine, which is our own in-house magazine that already has an international coverage in quite a few languages. So I would like to take the time and thank Melanie Norona. Melanie, you are, as we said from the beginning, you are part of the team. We're so happy always when you're with us, and we are looking forward to organizing more events. Hopefully next time will be hybrid or face-to-face. This is our wish. Just like that, we can also have a glass of bubbly and not just stressing ourselves with the cameras on and off and putting them again. So it's a little bit different. In the same time, we made it, and COVID obliged us to really become tech savvy, or try to be. So I want to thank again to all the panelists and all the speakers in panel 1 and panel 2 and our keynote speaker. I would like to thank as well our city productions teams for their hard work, and not to forget OB Meet. It is a platform that is a Nigerian platform that made it very well today. Well done to you, and you are really on the rise, and we would like to keep track on your activities in the next period. So well done to you. As an update for our next project, we would like to let you know the city production has secured the license for the second rights license for the World In, the Book of Predictions of The Economist for Nigeria. This means that we're going to have new content and more content coming from West Africa. So stay tuned, be in touch with us, and we will let you know as we go along. And definitely we're going to have a beautiful launch event, hopefully in Eco Hotel, even in Lagos, and it's not going to be online, it's going to be offline. Stay safe and see you very soon. Bye to all. Thank you very much.